Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. The UK's comeback has boosted the performance of the UK Equity Income Investment Trust sector, returning 14% over the last year, an impressive 79% over the last 5 years, and 105% over 10 years. The average UK Equity Income Investment Trust has a yield of 4.1% and is in demand as it's trading at a 3.5% discount in comparison to a 13.9% discount for the average investment trust excluding the 3i. But will the good times continue for the UK equity income sector? Well, I'm delighted to be joined by three managers from this sector: Ian Lance, who's the manager at Temple Bar Investment Trust; Julian Cane, who's the manager at CT UK Capital and Income Trust; and Thomas Moore, manager at Aberdeen Equity Income Trust. Right, on to the questions. Will the good times continue for the UK and your trust portfolio? And I'm going to ask that to Thomas.
Hi, Annabelle. Thanks, everyone, for dialing in. Well, I think that question requires a bit of a nuance because, yes, UK equities are genuinely cheap. And actually, if you look at the price earnings ratio on the UK equity market, it's somewhere between 12 and 13 times. It sits right down at the bottom end of any global markets. You really have to look into the depths of the emerging markets index in order to find any stock market that looks that cheap at the moment. And when you compare that with global stock markets, and in particular the US stock market, that provides some brilliant re-rating opportunities for us. We can find some great companies which are just poised, ready for a valuation re-rating. On the other hand, you did ask, what are the nuances on this question? Well, the UK economy isn't looking particularly happy at the moment. And I'm not going to pretend that it's all rosy, because I really don't think it is. I think the government's got a huge task on its hands to try to steady the finances without causing some kind of rout in the bond market. So, look, it's a difficult conundrum that they're facing. But I think we should definitely nuance the difference there between the economy, which is only a small percentage of the UK market, and the stock market, which can continue to thrive.
Well, I'm really pleased there's some positivity there on the stock market, if not on the economy. Now, Ian, what's your view on this? Will the good times continue?
Yes, I think they will. I would agree with Thomas that the UK market still looks very cheap, and within it, we think that the value part of it is cheaper than it's been for a number of years. I think the more positive thing is that we're now seeing some catalysts to realise that value in the form of takeovers. So lots of US companies seem to have realised how cheap UK companies are, and they are helping themselves to UK companies. And share buybacks. So companies themselves have actually started to buy back their own cheap equity. I suppose the final thing that I would say is that we've started to see money rotate from international markets into the UK, and there is a colossal difference in size. The US stock market today is $70 trillion. The UK is $3 trillion. So you don't need an awful lot of money to go from the US into the UK to have a reasonably significant impact.
Thank you, Ian. So M&A, share buybacks, transfers of money into the UK market. Sounds good. Julian, what do you think? Will these trends continue?
Well, I certainly agree with those comments. I think for many years, of course, the UK stock market has been rather left behind. It's been slightly like the ugly duckling that the Magnificent Seven, the US market, or more broadly, the international market, which of course is dominated by the US, has taken all the flows. And, over many decades, investors have really looked down their nose at UK companies and seen them as being very poor relations of elsewhere. But many of the companies that we see in the UK are very attractive and are generating good returns on equity, but they don't seem to get the share prices to reflect that. So we think that over time there will continue to be this re-rating of UK companies. There's no reason to stop that. Although, of course, you do have to separate out the UK economy from the UK stock market. But of course, most UK companies are headquartered here, but many of their operations really are truly international.